The sudden escalation of conflict in the Middle East sends immediate, violent shockwaves through global financial architecture. These tremors are primarily anchored in the extreme volatility currently gripping the world's essential energy markets. As oil production facilities face direct threats, shipping lanes through critical straits become dangerously constricted and narrow. The price of crude oil surges to unprecedented levels, triggering a chaotic domino effect across international exchanges. Investors, gripped by overwhelming uncertainty, begin to pull capital rapidly from vulnerable and unstable emerging markets. They flock towards safe haven assets like gold and government bonds, causing global currencies to fluctuate quite wildly. Central banks find themselves in a precarious position, forced to balance the need for aggressive interest hikes. They must combat the resulting inflationary pressure against the significant risk of stifling fragile global economic growth. Supply chains, already strained by existing geopolitical tensions, begin to fracture further under the mounting systemic pressure. This leads to widespread shortages of essential goods and raw materials, effectively stalling industrial output across nations. Major economies throughout Europe and Asia struggle as factories fall silent and production lines grind to halt. The initial panic manifests on trading floors where screens flash red, signaling a massive retreat from risk. Traders shout over one another, their faces illuminated by the frantic movement of declining stock market indices. Oil tankers sit anchored in dark waters, unable to navigate the blocked straits that once facilitated trade. The cost of transport skyrockets, forcing manufacturers to reconsider their reliance on distant, now unreachable supply sources. Inflation begins to creep into the daily lives of citizens, manifesting in the rising cost of bread. Everyday goods become scarce as the logistical arteries of the global economy begin to harden and fail. Central bankers huddle in sterile, high-security rooms, debating the merits of raising rates to save the currency. They fear that aggressive action might trigger a recession, yet inaction promises a total collapse of stability. The world watches as the interconnected web of finance begins to unravel, thread by thread, in real time. Gold prices climb steadily, reflecting the desperate search for security in an increasingly unpredictable and dangerous world. Government bonds become the only sanctuary for institutional investors fleeing the wreckage of the equity market crash. Currencies of developing nations plummet against the dollar, creating a crisis of debt for those already struggling. In industrial hubs, the hum of machinery fades as raw material deliveries fail to arrive on schedule. Port authorities report a significant decline in cargo volume, marking the beginning of a long, dark winter. The geopolitical landscape shifts as energy security becomes the singular focus of every major world government leader. Diplomatic channels are flooded with urgent requests for alternatives to the oil flowing from the conflict zone. The fragility of the globalized system is laid bare, revealing deep-seated dependencies that were previously ignored entirely. Consumers feel the pinch as energy bills rise, forcing households to cut back on discretionary spending habits. Retailers report a sharp decline in sales, echoing the broader contraction occurring across the entire global economy. The domino effect continues, moving from energy to finance, and finally into the homes of ordinary people. Small businesses struggle to maintain operations as the cost of basic inputs continues to climb without pause. The atmosphere in financial districts is thick with tension, as analysts predict a long period of hardship. Every report from the front lines of the conflict sends another tremor through the fragile stock markets. Investors watch the news with bated breath, knowing that one wrong move could lead to total ruin. The once fluid movement of goods across borders is replaced by bureaucratic hurdles and defensive protectionist trade policies. Nations begin to hoard resources, fearing that the worst is yet to come in this global crisis. The interconnectedness that once fueled prosperity now serves as a conduit for the rapid spread of panic. Economists scramble to revise their forecasts, acknowledging that the old models no longer apply to reality. The world is witnessing a fundamental transformation in how value is perceived and how trade is conducted. As the conflict persists, the initial shock evolves into a chronic condition of economic instability and fear. The ripple effect reaches every corner of the globe, leaving no market or industry entirely untouched today. Policymakers are forced to confront the reality that the era of easy growth has effectively ended. The global financial architecture, once thought to be robust, now appears brittle and prone to sudden collapse. Citizens demand answers from their leaders, who are themselves struggling to navigate this unprecedented and complex situation. The silence in the shipping lanes is a stark reminder of the power held by those controlling energy. Oil prices remain stubbornly high, defying all attempts at stabilization by the international community and major powers. The uncertainty surrounding the future of energy supplies continues to drive volatility in every major financial market. Capital remains locked in safe havens, starving the rest of the world of the investment it needs. The global economy is caught in a feedback loop of fear, inflation, and shrinking industrial output capacity. Every sector, from technology to agriculture, feels the weight of the mounting pressures on the global system. The dream of a seamless, integrated global market is fading, replaced by a reality of fragmented trade. Resilience is now the most valuable commodity, as nations look inward to secure their own economic survival. The crisis acts as a harsh catalyst, stripping away the excesses of the previous era of globalization. Investors are left to navigate a landscape that is permanently altered and significantly more dangerous than before. The world stands at a crossroads, facing a future where self-sufficiency is the only path to stability. The financial reality is no longer global, but fractured, as each nation fights to protect its interests. The ripple effect has become a tidal wave, reshaping the economic foundations of the entire modern world. There's no return to the way things were, only the difficult task of building something new. The global economy enters a period of profound transformation, leaving the old world behind in the dust. As the conflict persists, the long-term structural consequences for the world economy become painfully apparent to all. Nations are forced into a fundamental shift regarding their global trade policies and their deep energy dependencies. Countries that relied heavily on Middle Eastern energy exports now feel the crushing weight of their choices. They are compelled to accelerate their transition toward renewable energy sources and increase their domestic production capacity. This urgent pivot is fundamentally altering the geopolitical landscape for the duration of the next decade. The sustained high cost of living, driven by persistent inflation and supply chain disruptions, begins to bite. Consumer demand cools rapidly across the globe, pushing several major economies into a period of prolonged stagnation. The threat of a deep, global recession looms over every major financial capital from London to Tokyo. International trade agreements are now being renegotiated under the dark, heavy shadow of rising global protectionism. Countries prioritize national security over the ideals of global integration that defined the previous few decades. The crisis serves as a harsh, unforgiving catalyst for the emergence of a brand new economic order. Resilience and self-sufficiency now replace the previous era of hyperglobalization that once connected the entire world. The world is left to grapple with a permanently transformed and significantly more fragmented financial reality. Factories that once hummed with imported components now sit silent, waiting for local supplies to arrive. Government officials meet in emergency sessions to draft policies that favor domestic industry over international trade. The dream of a seamless global market fades into the background of a more guarded, cautious era. Citizens watch the news with growing anxiety as the price of basic necessities continues to climb higher. The once fluid movement of goods across borders is now hindered by tariffs, regulations, and deep mistrust. Energy grids are being rewired to prioritize local wind, solar, and nuclear power over imported fossil fuels. The geopolitical map is being redrawn in real time as alliances shift based on energy and resource access. Old friendships between nations are tested by the sudden need to protect their own dwindling domestic reserves. Investors look toward a future where stability is valued far more than the high growth potential of yesterday. The era of cheap, abundant energy is officially over, leaving industries to innovate or face total collapse. New trade blocs are forming, creating smaller, more insular circles of economic cooperation across the vast continents. The global financial architecture, once a unified web, is now a collection of disconnected, defensive regional hubs. Central banks struggle to manage the fallout, their tools becoming less effective in this new, fractured landscape. The transition is painful, marked by unemployment, high interest rates, and a general sense of societal unease. Yet, in this fragmentation, some nations find a strange, new strength in their newfound ability to survive. They are learning to produce what they need, reducing their reliance on the volatile, distant global market. The world is changing, and there is no turning back to the interconnected prosperity of the past. Every nation must now chart its own course through the turbulent waters of this new economic reality. The lessons of the crisis are being etched into the history books of every major global power. Resilience is the new currency, and those who lack it will find themselves left behind by history. The global economy is no longer a single, beating heart, but a series of smaller, independent pulses. This shift marks the end of an era and the beginning of a long, uncertain, and difficult journey. The world watches as the old order crumbles, making way for a future defined by local strength. Trade routes that were once the lifeblood of the world are now secondary to domestic supply chains. The focus has shifted from maximizing efficiency to ensuring survival in an increasingly unpredictable global environment. Every policy decision is weighed against the potential for future conflict or sudden, sharp economic shocks. The global stage is smaller, more crowded, and significantly more competitive than it was just years ago. Nations are building walls, both literal and metaphorical, to protect their economies from external, volatile forces. The promise of globalization has been replaced by the cold, hard reality of national interest and survival. It is a world where every country stands alone, yet remains inextricably linked by the shared crisis. The transformation is deep, affecting everything from the food on the table to the power grid. People adapt to the new normal, finding ways to thrive despite the limitations of the current era. The global economy has been permanently altered, leaving behind the ghosts of a more connected past. The future is no longer a shared dream, but a series of individual, nationalistic, and defensive strategies. The world is grappling with the consequences, trying to find balance in this new, fragmented financial reality. The era of hyper-globalization has ended, and a new, more cautious chapter of history has now begun. Every nation is now a fortress, guarding its resources and its people against the winds of change. The global ripple effect has finally settled into a new, stable, yet deeply divided and fractured state. The lessons learned during this time will shape the policies of generations to come for many years. The world is different now, and the path forward is paved with the debris of the old. Resilience is the only way to survive in this new, harsh, and unforgiving economic landscape we inhabit. The global economy will continue to evolve, but the era of total integration is truly behind us. Nations move forward with caution, knowing that the next shock could be just around the corner. The transformation is complete, leaving the world to navigate a future that is permanently and fundamentally changed. The fragmented reality is the new baseline, a testament to the fragility of our interconnected global system. The journey continues, with every nation seeking its own path to stability in this new, challenging world. The global economic ripple has finally reached the shore, leaving the landscape forever altered and defined.